weighs on the Hang Seng. We'll be right back.
Right now on CNBC Make It. Think you've had tough job interviews? You've never met with Elon Musk.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
This is the sound of Helen and Peter, hiking to the fairy tale fortress high above the winter wonderland below. Or it would be, if they hadn't stopped at the first beer house they came to. There it is, Helen and Peter. There's your incredible. Fly from London Gatwick to Salzburg from £29 each way. With British Airways, incredible is within reach. Terms and conditions apply. Limited availability and dates. Fare quoted is each way based on a return. cba.com/Gatwick for details.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, various policy applies. See tescomobile.com/terms.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
European markets just waking up today after a weak handover from Asia, but a strong week last week for Wall Street as well as here in Europe. The Stoxx 600 is coming off of now 5 positive weeks in a row. German stocks and Italian stocks also logging 5 weeks of gains. So quite a strong run for European equities. Earnings have largely come to a close. A few now trickling in, but largely done on that front. And of course, still watching U.S.-China trade relations. We had some mixed signals coming through at the end of last week. President Trump then on Saturday suggesting that they are moving along quite nicely in terms of those trade talks. But overall, we did see a weak session in Asia. We're going to go to that in just a moment. But in terms of the European Open, we are taking a lead from the weak overnight trading, and the Stoxx 600 opening about 1/3% lower. Let's take a look at the different sectors and see what's behind that 1/3% drop. Basic resources and banks firmly at the bottom there. Banks down about 0.8%. Basic resources about the same. Autos and retail round out the worst performers of the morning. So clearly, the China-sensitive macro sectors are taking a bit of a hit this morning. Moving right along, we've got technology, telcos, industrials. Those were right in the middle of the board there. We'll take a look at the remaining sectors in just a moment. Here they are now. At the top of the board, 3 sectors trading in positive territory. Utilities, healthcare, food and drink. Very clear message here. The defensive names are catching a bid this morning, while the more cyclical China-exposed names are at the bottom of the board. Let's take a look at the different regions. Spain will be an interesting one to keep an eye on this morning after a deadlock continues in Spain. The 4th election in 4 years failed to result in a majority. So now Pedro Sanchez will work to see if he can form a government government. In terms of the Spanish index, the IBEX is opened about 0.33% lower. Red across the board, though, looking at the different regions. Here in the UK, the FTSE 100 has opened about 0.5 percentage point lower, and that comes on the back of Moody's move to downgrade the UK's credit outlook. The DAX is opened about 0.5 percentage point lower as well. So red coming together across the board over in Switzerland, the main benchmark there, just teetering around the flat line. Now, as I mentioned, it's worth taking a look at where things ended in the Asian session, because Hong Kong police opened fire on protesters during today's morning commute, leaving one man in critical condition. These latest demonstrations come after 3 pro-democracy lawmakers were arrested on Saturday. The escalation in violence has weighed on stocks in Asia, with the Hang Seng trading sharply lower and just closing. So let's take a look at where we stand at this point. The Hang Seng down 2.7%. The mainland Chinese market, the Shanghai Composite, down 1.8%. So red across the board for Chinese markets and Hong Kong. Nikkei 225 also about 1/3 percentage point lower. Australia bucking the trend with that index up about 0.7%. Let's take a look at what this means for the European markets, the European stocks largely exposed to Hong Kong. So luxury, of course, a very Hong Kong sensitive sector. And as you would expect, we've seen quite a downturn now in the early minutes of trade. One name that sticks out, absolutely, Pandora, down nearly 5%. This stock has been incredibly volatile lately, very sensitive to the developments in Hong Kong, and today is no exception. Also, Burberry, Richemont, Swatch, Hugo Boss, all trading down more than 1%. Kering also down more than 1%. So very clear message. The luxury stocks are taking a hit this morning. Basic resources, a sector obviously very sensitive to U.S.-China trade developments and the overall health of the Chinese economy. And we got the fresh producer price data overnight, which showed the biggest fall in more than 3 years in October for the producer price index in China. Consumer prices slightly better. That index soared to an 8-year high, but of course, rising pork prices a large part of that. So overall, basic resources trading lower this morning as well. The laggard here, ArcelorMittal, down nearly 2%. Now, chip makers, let's take a look at where things stand here. A downturn as well for the chip makers here. Dialog Semi down more than 1%. ST Micro also down 1%. So relatively contained, but again, trading lower this morning. And now, in terms of the Hong Kong exposed banks, let's take a look at HSBC and Standard Chartered. Both of these stocks are trading lower. HSBC down about 1.4% and Standard Chartered down nearly 2%. So again, in line with that escalation in violence over in Hong Kong. And we're keeping a very close eye on those developments throughout the morning. Karen?
Joining us around the set now, Hugh Gimber, Global Market Strategist at JP Morgan Asset Management, and also staying with us, our guest host today, Koku Agboblua, who is Global Head of Flow Strategy and Solutions at SocGen. Just want to dive too quickly around what we're seeing in Hong Kong, because what jumps out, investors still watching events spiral despite the formal removal of that extradition bill. We've not seen any resolution. Is there any implication that you see for investors on this side of the pond?
So for me, I think there are some nerves around what's been going on overnight, clearly. And I think one of the challenges here is that it's quite difficult to see how this ultimately resolves itself. So the Chinese administration clearly keen to get the situation under control, but conscious as well that global eyes are watching in terms of how they go about that. So at the moment, I think there are potentially knock-on implications for domestic growth in Hong Kong, but I think that actually from a global market perspective, how this feeds through into the US-China trade negotiations is much more significant.
What about you? I mean, this is a huge financial hub, and we've seen the uncertainty persist. Other than the general feeling of unease, how would you weigh up some of the threats for investors?
Well, I think it's a bit similar if you look at the Gilets jaunes movement in France that sort of, stayed for a while and forced the hands of Macron in terms of its policies and giving back and trying to help the sort of purchasing power of the French population. So I think in the case of Hong Kong, I think the government hands are likely to be more tied, and it also will sort of drive the distribution of outcomes in terms of what they can get out of the U.S. trade war negotiation. But clearly, China can't really go full on in terms of using military force, so it's something that can lag for longer.
Can I switch over to what we're seeing this week? We've got a speech by President Trump and investors are very much looking for clues on a trade war. We've also got Jay Powell in front of Congress and also a House Budget Committee on Thursday. So a number of different items on the agenda as investors are closely watching trade and monetary policy. What's the most significant for you at this point?
So I think the President Trump speech will be really key because lots of the market optimism last week was based on relatively limited news flow. So some rumors or indications that we might be seeing a more comprehensive phase one deal. So the talk of potentially rolling back tariffs, not only putting future tariffs on hold, but yet then you hear comments from the US administration on Thursday and Friday, and that optimism starts to fade quite quickly. So if we do see some sort of clearer direction from the president this week, that we can start to think about how those tariff rollbacks, for example, might play into growth expectations for 2020, that will be really key in my view.
In terms of those tariff rollbacks, and it's a difficult question, but what do you think is priced in? If we do see a rollback of the December tariffs, do you think we actually see a rally on the back of that, or is that what investors are already using as their base case?
No, I think that would still be a significant step forward. So the way I've been thinking about the phase one deal, primarily it was about the removal of downside risks for 2020. So the initial comments around future tariffs being put on hold was about taking out downside but not really generating much upside for growth. And I think if we do then start to see, first of all, tariffs being rolled back, but also some sort of commitment on timelines for those to remain off the table, then that starts to change the picture quite significantly for next year.
And Koku, you mentioned the Gilets jaunes, and in a slightly different context to what I'm about to ask you, but President Macron made a trip to China, and it was a trip on behalf of France, but it was sort of also a trip on behalf of Europe, and President Macron really making strides there when it comes to strengthening the relationship between France and China. What do you think of this push that Macron is making now? He's in a very different place now than he was last year. How far can this go?
I think this is an important point because, as you know, China is embarking in this One Belt, One Road initiative and trying to sort of create a sort of stronger influence in terms of the Asia region. So I think Europe and France in particular have all the incentive to take part in that sort of wave of investment and capex to come. And I think that's also a way for Macron to sort of create a balancing force with the hegemonic power of the US, which is clearly retrenching with Trump agenda of making America great again and focusing on just the US. So I think this sort of balancing effect and creating more of a sort of economic area of exchange and growth is going to be important, and that's sort of in the incentive of the European Union.
Macron is seeking to create European champions and at the same time tracing trade deals effectively. But in the backdrop, you've still got European banks that are not really recovering from a European crisis, a financial crisis. What do you make of the next steps to try and shore up the banking system in Europe?
So obviously we had news last week around Germany potentially opening up to more consolidation and more risk sharing on the banking side. I think that consolidation piece is really key because effectively, in my view, the biggest problem facing European banks today is just the amount of competition in the system. And so we've had some progress on that over the past few years, but you still simply have
not in Germany, right? I mean, I can't believe we're still talking about this Deutsche Bank, Commerzbank. There was a failure to consolidate them. So do you still think that there is a chance that it will happen?
So I think this is still quite far down the road. And if you take, for example, Angela Merkel's comments around a willingness to open up to negotiation and open up to debate, but not framing a greater willingness to move towards risk sharing as the German position today. So I still think we're quite far down the road, and absent that consolidation, I think the European banking sector still faces some significant challenges.
Could you want to jump on this? Because it's a bit of a question of what comes first, whether there's a deposit scheme across the Eurozone or whether there's going to be a consolidation to fix the banks. Chicken and egg, really, in some ways.
Well, I think this is, I think the elephant in the room when it comes to European bank is clearly negative interest rates, and you might have the ECB tiering trying to sort of help and alleviate some of the pain that banks are taking. But ultimately, if we get a sort of fiscal stimulus or fiscal salvation in terms of Germany spending more, I think the banks will do better simply because long-term inflation and nominal bond yield will go up, and this in of itself is enough for the sector to rally. Just remember in 2016 when you had this fiscal stimulus by the US with Trump elections, the sector was up 60 to 70% in sort of less than a year. So the valuation today is so low and the sort of bearishness so large that you don't really need a lot to get a reversal.
For consolidation.
Yeah, so consolidation, I think creates more complication when it comes to regulation, sort of leverage ratio, RWA. So I think bigger is not necessarily always an obvious thing for banks today.
All right. Well, an interesting thought to end on for now. Hugh and Koku both stay with us. Coming up on Squawk Box, more uncertainty in Spain as the latest election again fails to provide any clarity as the far right makes big gains.
Got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
It's another Monday morning. Yet another windy day.
So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways. With flights and 7 nights hotel from just £349 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Batteries running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
Okay, Mr. Smith, tell me what happened.
Well, I just sat down when pow.
Pow?
Pow, right in the mouth.
And can you describe the assailants?
There were 3 of them.
And how are they dressed?
With rosemary garnish and a red wine jus.
Jus?
Jus.
Well, it's like a gravy, is it? Oh. Any potatoes at the scene?
Oh, yes. Mashed with garlic.
That's a serious assault.
There was no salt.
Lamb. Hits you in the chops. More knockout recipes at simplylamb.co.uk.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
Welcome back to Squawk Box. So let's take a look at a couple stocks in focus this morning, kicking off with UBS. A new co-head of wealth management at UBS, Iqbal Khan, has told the bank he sees, quote, quick wins by extending credit to rich clients. The memo to staff, seen by 2 news agencies, is the first indication of Khan's strategy at UBS, following his controversial departure from Credit Suisse amid a spying scandal that rocked corporate Switzerland. Khan told employees, quote, financing is definitely definitely an area where we can do more in a move that could spark comparisons to his time at rival Credit Suisse. And on that note, let's take a look at Credit Suisse, which is also in focus this morning after it announced a raft of executive changes, with 22-year-old veteran David Miller appointed as CEO of its investment banking and capital markets business. Miller will replace James Amin, who is taking on a new role as the head of private credit opportunities. He'll also take Amin's seat on the bank's board. Eric Varvel has become chair of investment banking and capital markets, replacing Harold Bogle. The changes will take place with immediate effect.
Let's pick up our conversation on strategy. Hugh Gimber staying with us, global market strategist, JP Morgan Asset Management, and Koku staying with us, our guest host today from SocGen. I want to ask you a little bit more about financials. We're just talking about your ideas around consolidation, but you've also got some research about the outperformance of the US market based on technology versus the underperformance of Europe with financials. Just explain to us what's transpired.
Of course, so this is a client question that we often get around what it might take for Europe to outperform. And actually, when we did the work, it was quite noticeable that if you look at just US tech and European financials alone, you can explain a really significant part of the outperformance, not just over the past couple of years, but actually over most of the past decade. So you're looking at, since 2017, about 3/4 of that outperformance of US versus Europe being driven by just US tech and European financials. And so I think for Europe, some of the issue is that the sort of overall gloominess around the politics or around the banking sector can tend to weigh on investors' perceptions of the market as a whole. Whereas actually, if you can look beyond just the largest sector, the financial sector, then things haven't been as bad as many might have thought over the past couple of years.
So can I say with absolute certainty, there's no way that European financials will outperform the growth story of technology companies in the States, at least over the next few years. But what's in the price? Because US financials, European financials, I should say, are heavily beaten up versus tech has been a story that investors want to be invested in.
So I think that's exactly the right question, because if you think about the risks to the US tech sector, I agree with you that the growth story there has been very strong. But then thinking ahead to the US election, for example, next year, and the potential for new regulation to start to hit the sector at a time where valuations are not overextended, but are already, relatively strong. Compare that to European financials, where, as we've been discussing, a lot has already been discounted in that sector. And so I do think the outlook for the two is a bit more balanced, given the way that the starting point you have from valuations is set up today.
Well, I think this is an important point, because I think we had fiscal tightening when it comes to European banks regulation, and now one of the things we could see is fiscal easing in terms of regulation for the banks, because the valuation of the sector has gone so low that some of the European government officials are pointing out the fact that weakened European banks might lead the way for US bank to essentially be the only source of financing for European corporates, and clearly Europe wants to have a strong and vibrant financial system and financial banks, and I think that could be a catalyst for reversal.
It's an interesting point in terms of European corporates and their preference for having a U.S. bank be potentially their sole source of financing. And talking to corporates, it doesn't feel like they're content to, pull their money from Deutsche Bank, for example, as they undergo this major restructuring, put it with a U.S. bank, and just be happy not to have a European bank advising them. So clearly there's demand from corporates for a European champion, but is that going to happen?
Well, I think it will, because you have a lot of historical ties. If you look at corporate hedging, for example, a lot of the French leading banks, or German or Italian or Spanish, have very long history with their corporates, and I think this is something that do not want to see change. I don't think you'll necessarily see a sort of European champion or this sort of universal banking system, because of the cost of regulation in terms of capital requirement, etc. But I think ultimately it tells you a lot in terms of the path of least resistance in the government trying to help their banking their banks, just simply as that.
Hugh, earlier on we were speaking to Koku, who made the point that bigger is not necessarily better when it comes to European banks. And again, just thinking about Deutsche Bank, one of the major restructuring stories here, they've obviously made the choice, taking the big bet that they can be the corporate lender to corporate Germany without having things like equities. So they're not going to be able to cross-sell in that way. Do you think it's possible for these investment banks to be successful if they're only offering one window into the capital markets world, or do they have to offer a suite of products?
No, I think that is possible, and it's a trend that we've seen across the banking industry over the past couple of years, and particularly with areas such as MiFID II putting greater pressure on parts of the traditional banking model. We're seeing that across the board, companies are really having to focus on the areas where they're strongest. So it's not an environment today where you can get away with being one of the top 10 or the top 20. You really have to be in the top 3 or 4 of the strategy that you're trying to provide.
Hugh, let me ask you about politics in the UK, election coming up, and we saw an Observer poll over the weekend suggesting the Labour Party had narrowed the margin by which it trails the Tories by a little bit, but still, it's a trend, and if investors see more of it, they might start to worry about a Corbyn government. Well, how do you weigh up assets in the UK and the risk at this point?
So I think the UK is really hard at this point because of the polling data that you've described. We're putting very little faith in the numbers, frankly, today, because there are a number of reasons why we think that polling data ahead of a December election, which is so specifically driven by one single issue, is less reliable than it may have been in the past. And so for those investors that are considering, say, a big tilt into UK small caps on the belief that a Brexit deal is approaching if the polls are correct and we would end up with a Conservative majority, I'm a little more nervous about that because I really don't feel that at this stage, we're still 4 to 5 weeks out from a UK general election. I think there are a lot more twists and turns to come.
It's funny, normally we look for some sort of building of support by either side. But in this case, I wonder whether it's going to be one of the leaders falling on their sword for some sort of misstep. Because if you look at what's happened, what's transpired so far, a series of mistakes in communication over time for both of them. So isn't that a greater risk this time rather than someone building support?
It's certainly been an odd start to the campaign. We're only, 4 days in, I think, from most parties' official start, and we've already had a number of stories, and I think the rise of social media is playing a part in that if you're a politician today, you maybe have a 10-year Twitter time frame, whereas previously you might have had a lot less history. I think in the months or the weeks to come, I should say, it's quite interesting that a fiscal battle is very much front and centre. So it's quite unusual that both parties are really coming out with some quite similar commitments to future spending. Now, clearly the magnitude is different, but the direction is the same. And so perhaps, yes, the electorate are looking for ways in which to differentiate across the different parties.
Spend more money, loosen the purse strings. I think that's the message from both sides, just different ways of spending it. Hugh, thank you very much for joining us. Hugh Gimber, Global Market Strategist, JP Morgan Asset Management. Koku staying with us, our guest host for this show.
Let's move on and take a look at Spanish markets. Spain's fourth election in 4 years has again failed to deliver a majority. The socialists came out on top, but the big winner of the night was the far-right Vox, which more than doubled its seats to become the third largest party in parliament. And taking a look there at the Spanish index, it is trading lower this morning. One of the key stocks there that's trading in the green, Inditex, up about 1/3%, but that is clearly bucking the trend. The Spanish banks taking a bit of a hit, in particular CaixaBank down 1.3%, Banco Sabadell down 1.4%. So overall, a negative message there from Spanish markets. Of course, that is in line with a broader downturn across Europe. Well, let's get out to Willem, who joins us in Madrid. And Willem, I believe you're there now with a guest.
That's right, Juliana. I'm joined by Antonio Roldan. He is the director at the Center for Economic Policy and the Political Economy at ESADE, the business school here in Madrid. Also a former spokesperson for Ciudadanos, Citizens Party. Now, they really fared very badly in yesterday's election, and they were replaced as the third largest party in this parliament by the far-right group Vox. Why do you think that happened?
Look, some of us said a few months ago when we had the results, we said, look, for a centrist party, if you have a majority with the Socialist Party, which was, we had that majority then, 180 MPs, We said we need to get an agreement with them. We need to push for reforms. We need to push for anti-corruption measures. We need to make sure that nationalism is not so influential in Spanish politics. And the leader of the party decided to go ahead. He wanted to be the leader of the right, and those are basically the results. What happened is people in the center don't trust that he is going to be pragmatic and bring about reforms, and people in the right don't believe him because you have two guys on the right that are much more reliable for right-wing voters than he is. So we need to really rethink what the strategy for the future is.
A lot of people around Europe were looking at the performance of Vox that didn't have a single seat a year ago and now has more than 50. Why have they been, in your view, successful? What have they plugged into amongst Spanish voters that's given them this opportunity?
Look, the biggest problem we had is the huge irresponsibility of the Socialist Party and Ciudadanos having had a majority, not bringing about a government, right? Because then people get tired, you give them another opportunity, people are saying, look, these conventional politicians are incapable of getting agreements, they're incapable of bringing about reforms, so they go to the extremes, and and Vox, we had also in between the last election and this one, we had the crisis in Catalonia. They have been very outspoken on that, very radical. I think it's probably the worst news for Spain is to have Vox as the third force. Basically, the narrative now is completely polluted. The debate is completely polluted, and we have a centrist Liberal Party that is basically lost. I hope it can at some point get back to form centrist majorities.
So after the April election, with the Socialists having a few more seats than they do today, there was the possibility of them working with Citizens or with Podemos, and maybe trying to find a majority along that path. Is that path now completely closed to them?
Yeah, so the problem we have now is that we don't have a majority in the left. We don't have a majority in the right, and we don't have a majority either in the center. In the past, we had a majority in the center. And now, in all cases, you depend on the radical pro-independentist parties. So ERC, the Catalan, need to be somehow in one of the majorities. So that makes it a very difficult scenario to form majorities, to pass first, to form a government, and then to pass a budget or to do any reform. So we continue to be on a deadlock. We continue to be in political paralysis, in an even worse scenario of the one we had a few months ago. And that means it was a disaster to go to an election. It's the fourth election in 4 years, and it's time that politicians start thinking more about the country and a bit less about their personal interests, right?
So do you think that a fifth election in 5 years is now ruled out, or is that still a possibility?
Not at all. Not at all. So there is a very tight competition between the right and the left. The incentives within the right, with three parties to support a grand coalition or something like that, are very low, of the Popular Party. And as I say, if you depend on the left of seven parties, including the ERC radical pro-independentists, it's not the place where I would like to be. So it's very bad news for Spain. We had a huge, very good opportunity to do reforms, to have a stable government, probably an exception in Europe. And now we're back in a much worse situation because of irresponsible politicians.
Antonio, we'll leave it there. Thank you so much for joining us this morning here in Madrid. That's Antonio Roldan. He's director at the Centre for Economic Policy and the Political Economy at the Business School here in Madrid, ESADE. Back to you guys in London.
Willem, thank you so much. Terrific coverage this morning on the back of the latest Spanish elections. Now, coming up on the show, Saudi Aramco publishes the prospectus for its highly anticipated IPO, but leaves investors waiting on details. We'll discuss that more at ADIPEC in Abu Dhabi right after this.
The CNBC app has new features just for you.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Reason to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
The Hang Seng closes 2.6% lower amid escalating violence in the city after police opened fire on anti-government protests, leaving one demonstrator in critical condition. And Europe tracks Asia lower, with Hong Kong exposed sectors like banks and basic resources leading declines. Alibaba is on pace to smash last year's Singles Day sales record, netting $30.4 billion with roughly 7 hours to go in China's star-studded online shopping event. Deadlock in Spain. The country's fourth election in as many years again fails to provide an outright majority. But the far-right Vox Party more than doubles its seats to become the third largest in parliament. After that weak handover from Asia, European markets have taken a step lower. The Stock 600 currently down about 0.15%. This, of course, comes after 5 straight weeks of gains for the main benchmark. But those Hong Kong exposed names are weighing on the overall market. We saw a 2.6% drop in the Hang Seng, as you heard there in the headline. So clearly that weighing on sentiment in the region and taking a hit also on what's happening here in Europe. Earnings season coming to a close. Still some names coming through this week, but in large part over. And now we are looking forward to Jerome Powell's testimony before Congress later this week. We'll get his fresh insight into how he's thinking about the U.S. economic outlook. And of course, watching out for any more concrete headlines when it comes to U.S.-China trade. President Trump is due to speak this week as well. And that comes after fairly mixed messaging at the end of last week and over the weekend in terms of where things stand on the U.S.-China trade front. Well, let's dive into the sectors and see what the split looks like now, about half an hour into the trading session. So we've got 3 sectors trading in positive territory here. Technology has crept into positive territory, up about 0.2%. Food and beverage and healthcare are the other key gainers this morning. Outside of that, basic resources, banks, insurance, and real estate are the worst performing sectors this morning. Banks and basic resources, of course, highly affected by what's going on in China, in mainland China, in terms of the data we got through on the inflation front, but also, of course, the unrest in Hong Kong. Let's take a look at the individual stocks and see what the big movers are this morning. At the top of the board here, a UK name. We've got Greg's shares up nearly 12%. So a big mover here this morning. They lifted their outlook, so providing some optimism for investors. Marks and Spencer's down about 2.5%, one of the performers this morning. H&M also down about 3%, and Pandora and Richemont among the worst performers as well. Luxury more broadly taking a hit, and a lot of that pessimism this morning coming on the back of what happened in Hong Kong. Ken? Karen?
Juliana, thank you. Iran's President Hassan Rouhani says the country has uncovered a new oil field that could rival the US's crude reserves. Rouhani said the field in southwestern Iran contains some 53 billion barrels compared to the US's proved reserves of 61 billion barrels, according to BP data. However, in light of US sanctions, Iran may find it difficult to monetize that swiftly around those new reserves. Meantime, Saudi Aramco will offer 0.5% of its shares to retail investors in a process that starts on the 17th of November, according to the company's prospectus for its highly anticipated public listing. However, the long-awaited document still left investors guessing as details of the projected largest ever IPO remain scarce. We have a huge team on the ground. Let's go out to Dan now from the ADIPEC conference in Abu Dhabi. Dan, you stepped in. Hadley, Steve now doing panels. Give us a sense of what you're watching there on the ground, and I'm sure everybody's chasing more comment around Saudi Aramco.
Absolutely, Karen. Saudi Aramco is the biggest oil and gas story in a decade, and it is key to the conversation here at ADIPEC 2019. I would say this is probably the most important oil and gas conference of the year here in the Middle East, and there's plenty of these types of conferences, but none of them really have the impact that ADIPEC has. Why is that? This conference attracts about 145,000 trade visitors. Downstairs, there's more than 2,500 companies, international oil companies. We also have national oil companies and top policymakers from around the region as well. And what really also separates ADIPEC from the pack of oil and gas conferences is exactly how much business is done here each year. About $18 billion worth of deals were signed in 2018, and 2019 is also shaping up to be a big one as well. Now, in terms of the policymakers on the ground, of course, key decision makers from the United States and around the region as well. But just a short time ago, I had the opportunity to speak with Oman's energy minister, also very important to the conversation that oil and gas executives and policymakers are going to have at the OPEC meeting in December. I asked him whether or not it's necessary for OPEC to deepen production cuts as we come into that meeting and into 2020, or whether a rollover of the current deal would be better. He indicated that deeper cuts are not necessary, and his preference would be for a rollover. Listen in.
In spring,
so what's likely extension towards the end of March?
Sizing it too much makes a lot of sense.
Are you concerned about the economic outlook heading into 2020? Lots of talk about trade war, recession in the US.
No, I think all indication shows that things are getting better than what we thought 6 months ago. The fear of recession, downturn, crisis, no one talks about that anymore, I think. And the signs of an agreement between US and China is positive. So I think things are getting much better. We are in a much better position today than we were 3 months ago.
Why is the oil market so worried about demand then?
Are they?
Yeah. Demand's a huge factor in the oil pricing story right now.
I think that's a part and parcel of the business. We have to take demand serious. We cannot take demand for granted. It's just one of those variables that we have to mention all the time. Oh yeah, I mean we've just had a number of 1 million to 1.2 million growth, and I think that has been a number that has been relied on in the last 3, 4, 5 years. And they've never let us down, despite all the challenges. Demand has risen. The challenge is who covers that growth, and that has been what all this OPEC Plus agreement is all about.
Oman Janet's energy minister weighing in there on the outlook for demands, really pushing back on a lot of the concerns that we've heard in the oil market about the overall demand picture heading into 2020. Guys, we have a lot more to come for you here at ADIPEC, including one-on-one on stage with the former U.S. National Security Advisor and Secretary of State Condoleezza Rice. My colleague Hadley Gamble is going to be speaking to Dr. Rice in that conversation here at ADIPEC. Of course, a lot to be discussed, including exactly what's happening with regards to geopolitics in the region, the impact of Saudi Arabia, the latest on Iran as well, and how America plans to fold itself into the picture in the future as well. So that's going to be a very important conversation. We're going to be bringing it to you live. I'll toss it back over to you for now.
All right, Dan, thank you very much for bringing us the latest. We look forward to more coming out of Abu Dhabi. Now, shifting gears to the tech sector. investor, TeamViewer shares are higher after posting strong third quarter results and confirming its full year guidance. The German software connectivity company reported a 95% rise in core profits in its first set of results since going public earlier this year. So far, it's Europe's biggest IPO of 2019. Oliver Steele, CEO of TeamViewer, joins us now. Oliver, tech IPO and profitability are not words that we often hear together. Today, you reported more strong growth, more strong profitability. How sustainable is this growth we're seeing?
I think we have a very unique business model where we really combine a very efficient go-to-market model. We have a large free user base globally, and we're able to convert these free users into paying customers. That makes the whole marketing very efficient, and therefore we see the growth and we see the profitability on a sustained basis.
Now, in terms of investments to keep this growth going, you note in your guidance that you are going to continue to invest in your future growth potential through additional investments in sales and marketing and research and development. What's the scale of investment we should expect?
We clearly, with the growth of well above 30%, we have the ability to have significant investment, multi-million investment in people, effectively in salespeople around the world for enterprise and for our inside sales, and also in R&D capacity, really heads. We're planning that out for next year. We just opened an office in Greece, another R&D hub and location, in order to be able to grow faster on this.
Oliver, I want to talk about the excitement for investors and what exactly they are investing in at this point. And what you provide is remote access solutions for that. And we think about more and more workers working from home or flexible office spaces versus in, say, a headquarters type of environment. What's the trend that you see? How much more can this trend progress? And where is that opportunity for you?
I think the opportunity is really that we're trying to really connect the modern global digital enterprise. If you think about companies transforming themselves, they really want to change their business processes. Working from home, less commute is one element, but also the whole connectivity of internet devices, digital production, digital services, more remote services. There's a huge opportunity in all these different use cases. And with what we're trying to do is make the TeamViewer platform and the TeamViewer product really usable for all these use cases, and that allows us to gain significantly larger projects now.
I'm going to jump straight into augmented reality because that is flagged up in your report as well, where you're looking at the opportunity around the Internet of Things. And anyone who's ever done a conference call has seen or sat through the events, and they probably would describe the experience as somewhat underwhelming at this point. Augmented reality has the ability of potentially creating a hologram, maybe putting a person in a room, changing the conference facility. What do you see the opportunity with augmented reality with your business, and how could that be transformational for earnings?
So we focus a lot on industrial use cases in this. So think about service forces that are out there in the field, experts that are out in the field, or salespeople out there in the field. And what we try to do is we try to improve the user experience of a technician that is in the headquarters helping somebody out there in the field. That could be another technician, or it could be a consumer trying to solve a consumer problem. And we allowing for a live connection with between those two people, and then helping with augmented reality and virtual reality features to make that service experience much better. And that we actually seeing gaining very nice traction, because companies all over the world and of all sectors want to improve their service experience and at the same time reduce their cost to serve.
Oliver Steele, thank you very much for joining us, the CEO of TeamViewer, with us on the program. Just going to take another quick look at Singles Day, the Alibaba consumption event that's been taking place live in China. And you can see some numbers on the screen now. 214 billion yuan spent. So we've topped the numbers from last year. And in US terms, we're not quite there yet. 30.8 billion, the number from last year. 30.7 you can see on the screens with the depreciation in yuan having a little bit of an impact. Let's go to Arjun for more. Arjun, the Chinese consumer is throwing everything at this event, and Adobe Analytics, I believe, has been crunching the numbers, and they believe that the money spent in China will be more than the Thanksgiving, Black Friday, Cyber Monday money spent in the States. Just tell us about the power of that Chinese consumer that's been displayed in 2019.
Well, absolutely, Karen. I mean, this event eclipses any of those US single shopping days we hear about, the likes of Black Friday, the likes of some Cyber Monday as well. And Alibaba just showing the kind of power it does have here in China with the consumers. The numbers behind me show it has ripped through the record it's set last year. And of course, we talked a little bit earlier about the concerns over the Chinese consumer, given that the Chinese economy is slowing down and whether that would have any impact. But what you are seeing is continual strength of consumers still shifting their spending online. And what's interesting here, it's not just the big cities, the likes of Shanghai or Beijing or Guangzhou, that is driving this. What you are seeing is some of these lower tier cities, those smaller tier 3, tier 4, tier 5 cities also getting in on the action. And that's really been a trend in Chinese e-commerce over the past couple of years. There's a company here called Pinduoduo, and they've made a lot of progress in these lower tier cities, something that perhaps JD.com and Alibaba haven't really put their energy on too much, but are now beginning to focus on, and it's being seen as somewhat of a battleground for Alibaba and JD and Pinduoduo as well. Actually, in the recent earnings as well, Alibaba spoke about the progress they're making in lower tier cities. And so this event is not only just about trying to drive sales and excitement around Alibaba's platform, it's also to some extent a marketing pitch towards some of these lower tier cities, trying to offer these really hefty discounts, getting those consumers, perhaps with not as much spending power as the big cities, stuck into the Alibaba platforms, and therefore in the long term hoping to keep them as consumers. So it's more than just about sales here. It's a big marketing pitch, and also could be quite important for Alibaba's business to expand beyond some of those big tier 1 cities here in China. Guys, back to you.
Arjun, you haven't done the disclosure. Do you need to say I contributed to these numbers? Did you have a shopping list today?
I had a little look around, shall we say, Karen. I look at these events, and it's always one of those things. I look at all the discounts, like, do I really need this? And I didn't really need anything. So none of my money is contributing to that GMV figure back there, actually.
Thank you for clarifying the difference between want and need for us, Arjun. Come in on this. Weight and money has come into the equation. But I wonder whether this is a little bit like post-financial crisis. So Americans flood to a Costco and a Target. But what you've got today, obviously a lot of promotions. Is this a sign of stress in some ways, which is sort of the opposite of what we're talking about, where people want to spend money that they have and get the most bang for the buck, so to speak?
Well, I think this is the difference between nice to have and must haves. And I think the sort of Chinese story is really this idea of nice to haves when your marginal propensity to spend is increasing because your sort of jobs prospect are improving. There's also another element that's important in China, I think it's the culture element of it, sort of the external signs of wealth are very important. So I think the Chinese typically invest or spend more relative to their disposable income than what Western consumer typically do. And I think that's sort of an important dynamic in terms of getting cheaper and best value for money type goods, but also the cultural dimension that is also at play here.
Yeah, I'd love to see the breakdown of what people have been buying today, because it might be just some basic items too. Washing powder, for instance, a lot of that's conducted over the internet. But thank you very much, Coco. We'll pick up on that just after the break. But also ahead, Germany celebrates 30 years since the Berlin Wall came down, but economic differences remain between East and West. More from Berlin right after the break.
Got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, various policy applies. See tescomobile.com/terms.
This is a live message from the Survivalist Network. There are reports of an impending zombie apocalypse reaching London. But don't panic. Our intel shows that for £199 a month with 0% APR representative, you can locally access the Toyota Hilux Invincible, the only vehicle with the build strength to withstand savage hordes of the undead. Once inside your Toyota Hilux, stay on this frequency for updates. You'll be fine.
0% APR representative on new sales of Hilux Invincible over 42 months. £199 per month. Customer deposit of £9,701 when financed through Access Toyota by 16th of December 2019. £12,525 optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services. You're watching Squawk Box. Germany has been celebrating 30 years since the Berlin Wall came down and its subsequent reunification. The collapse of the wall marked the end of the Cold War. Annette Weisbach joins us with more now from Berlin. Annette, we're 30 years on, but economic differences still exist between the two sides of Germany. What more can you tell us?
Yeah, exactly. Economic differences are still here, even though they are kind of converging. If you look at the unemployment rate, it is higher in the east, but not like by a lot, by 2% or so. Productivity is lower here in the east, and also disposable income is quite lower than in the western part of Germany. But I think the most remarkable fact is that even after 30 years of reunification, we don't have a single DAX company which is actually operating or having the headquarters here in the eastern part of Germany. For a long time, that was a big issue, that the job market didn't pick up substantially. You know, there were loads of promises when reunification happened 30 years ago that very soon we will have like a great future for the East, but actually the opposite happened. So we had a record high unemployment in eastern part of Germany. That has sort of gone away, but still, it's a problem of mentality. I would like to kind of go, sort of pin that also to the political development, because we had those regional elections recently, and they all showed us that the Populist Party, the anti-immigration party, anti-foreigners party, AfD, scored record high here in the east of Germany. In the West, it doesn't have that much of a success. In the West, it rather is like a success story when it comes to the anti-Euro appeal. But the eastern part of Germany, as one can argue, is still like lacking behind psychologically as well, because if you look at opinion polls, like a majority of people here still thinks that they are not taking part in the economic success story of Germany, and that is why we have that still existing divide between the West and the East. With that, back to you.
Thank you very much for that, Annette. We're just chasing some comments now from Moody's. It has published its annual global outlook for sovereign creditworthiness. Says outlook for 2020 is turned negative from stable, reflecting expectations for fundamental conditions that will drive sovereign credit over the next 12 to 18 months. Moody's going on to say disruptive, unpredictable domestic political and geopolitical environment is exacerbating the slowdown trend in GDP growth, aggravating structural bottlenecks, increasing risk of economic or financial shocks. On that note, Koku, what do you think?
Well, I think this is sort of the perfect recipe to increase budget deficit and spending by sovereigns, because monetary policy is not going to be solving or won't be the solution for the next recession or slowdown in growth. So fiscal clearly going to be the solution. And I think it will still to be seen whether we get a shock, an inflation spike as a result, which could create not only a rotation within equity markets and good for value, but it could also be a problem for profitability of corporates if input costs were to rise. So I think this is a consensus view that fiscal is a problem, but it's not obvious that it will necessarily create growth going forward.
And what do you think is priced in terms of fiscal expectations? There's lots of hopes of more fiscal spending coming from Europe, but a lot of doubts about whether it's actually going to happen.
Absolutely, and I think not all the countries can afford to do more fiscal spending, particularly if you start to see stresses in their credit rating. Italy or the periphery is a good example. So Germany and sort of the Netherlands are a better place to do more, and there's been talks about infrastructure spending, investment in education, etc., or green bonds, for example. But I think there will be question around the fiscal rule with respect to the European Union, and in terms of crisis, this is a fiscal rule that can also change. Last but not least, German constitution also put a cap on the budget deficit, so some of these things will have to change as well.
Well, as Moody's raises the red flag on the global economy, we've got to leave it on that note. Coco, thank you so much for joining us. Coco Agbabloa, Global Head of Flow Strategy and Solutions at SocGen, our guest host, and that is all from Juliana and myself for Squawk Box. Street Signs coming your way next.
Anytime, any place. Watch CNBC Primetime live.
Yeah, baby!
Woo! It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
Whether you're waiting for a train or a takeaway, with Tesco Mobile, you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week, you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, various policy applies. See tescomobile.com/terms.
Should we go halves?
I'll get this. Let me just get my card, which was in my pocket.
You can't control awkward first dates, but if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Guard takes the snap. He'll hand off Jacob straight ahead across the 15. Breaks a tackle 10. Across the 5. End zone. Touchdown.
Tonight, TuneIn has your Monday night NFL football with the Seattle Seahawks at the San Francisco 49ers. Kickoff at 8:15 p.m. Eastern.
It's caught on the near side by Jarwin, the tight end 30. Down the near sideline, the 20. Got a block at the 15. Breaks a tackle 10. Down the sideline 5. He's in for the touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Good morning and welcome to Street Signs. I'm Joanna Versace and these are your headlines. The Hang Seng closes sharply lower amid escalating violence in the city after police opened fire on anti-government protests, leaving one demonstrator in critical condition. Alibaba smashes last year's Singles Day sales record, netting over $30 billion with roughly 7 hours to go in China's star-studded online shopping event. Deadlock in Spain, the country's fourth election in as many years, again fails to provide an outright majority, but the far-right Vox Party more than doubles its seats to become the third largest in parliament. And Saudi Aramco announces it will sell up to 0.5% of shares to retail investors in its IPO, but stays mum on the size of what could be the world's largest ever listing. Well, good morning and welcome to Street Signs. A quick check-in on markets and how they're faring this morning. As you can see behind me, it is a wall of red for Asia. And Nikkei 225 down about 0.25 percentage point, but big moves for the Chinese indices. Shanghai Composite down 1.8%. Hang Seng down 2.6%. Big mover in the Hong Kong index here. This after Hong Kong police opened fire on protesters during today's morning commute, leaving one man in critical condition. Now, these latest demonstrations come after 3 pro-democracy lawmakers were arrested on Saturday. The escalation in violence has weighed on stocks in Asia, as I've just been recounting. So Hang Seng down about 2.6%. Shanghai actually the most it's dropped in the last 4 months. For more information on what has been happening, Emily Tan filed this report.
Hong Kong markets getting sold off on the back of rare weekday violence as weekend unrest rolls over into the citywide protests on Monday. The Hang Seng Index drops more than 750 points or close to 3%, with benchmark heavyweights HSBC and Tencent off more than 1%. AIA shares down more than 3%. Hong Kong police opened fire this morning at protesters, hitting at least one man. The 21-year-old is in hospital and in critical condition. Protesters blocked major thoroughfares across the city, resulting in major traffic disruptions. At lunchtime, police fired tear gas in the central business district after protesters gathered in front of a high-end luxury mall only a few blocks from the Hong Kong Stock Exchange. Numerous subway stations were closed after protesters started a fire on a train. There was vandalism at numerous stations and objects thrown onto the tracks. Tensions were inflamed this weekend following the death of a 22-year-old student last week after he fell in a car park during a police dispersal operation. At least 8 of Hong Kong's 10 universities canceled class today, with several rounds of tear gas being fired in one of the universities. I'm Emily Tan in Hong Kong. Back to you.
Well, with the tensions flaring up in Hong Kong, there has been an impact not just on Hong Kong equities and Chinese equities, but also on any banks in Europe that have exposure to Hong Kong. Here we're looking at some of the Asian-focused banks. HSBC down about 1.6% today in trading. Standard Chartered down about 2%. So all of the names that have exposure to that particular part of the world are struggling a little bit in trades. Also, luxury stocks. This is a theme that has come up quite a lot in our chats over the last couple of weeks. Indeed, any company that has significant sales exposure to Hong Kong is coming under the radar today. We've got LVMH down about 0.6 percentage point. Richemont down 2.4%. Remember, we were talking about their disappointing earnings last week. Double-digit declines in Hong Kong. We're seeing that continue to play out today with selling in that stock down about 2.4%. Burberry also in the UK down a similar amount. So you're definitely seeing luxury get hit on back of the continued unrest in Hong Kong. But how about European markets as a whole? As I mentioned, the mood from Asia, the handover from Asia was quite negative, and we're seeing that transpire today in Europe. The underperforming index today is the FTSE 100 in the UK, down about 40 points. 0.6 of a percentage point weaker today. And this is after Moody's, the credit agency, changed the outlook on UK credit from stable to negative on Friday, sent a bit of a surprise to markets, and you are seeing the repercussions of that. But the credit agency did cite some of the Brexit uncertainties and the questions about the institutions and their ability to withstand some of the developments that have been happening with respect to Brexit and the discussions. So clearly this is having and continues to have an impact on the UK index. Xetra DAX down about 0.2 of a percentage point. We have the 30-year commemoration of Berlin Wall falling. We'll talk more about that with Aneta. And then the FTSE MIB also trading on the back foot today. What we're not showing here as well is the Spanish index, the IBEX, also trading on the back foot. We had Spanish elections yesterday. We'll talk more about that with Willem shortly. In terms of sectors, any sector that has exposure to China and to Asia is struggling today. So we've got basic resources down about 1.6%. Here it's basically miners, those stocks coming under pressure. Banks also down 0.6 of a percentage point. As I mentioned, the names with Asia exposure, Standard Chartered, HSBC are the ones that are coming under pressure. Household goods, luxury also selling off. And then right at the top, we've got technology basically around the flat line, and then healthcare, relative defensive, also up about 0.3 of a percentage point. But it is not all about Hong Kong protests and China numbers. We also had Alibaba's Singles Day today, and sales have topped last year's record, exceeding $30 billion, with about 7 hours still left to run on the 24-hour Chinese shopping event. And Arjun joined us live from Hangzhou. And Arjun, just looking at these sales figures, I mean, we spent the past year talking about the weakness of the Chinese economy, the weakness in consumer spending, and yet another record broken yet again on Singles Day. What does this tell you about the health of the Chinese consumer?
Well, that's absolutely right, Jemana. And behind me, you can see that GMV, gross merchandising value figure, continue to tick up, even though Alibaba surpassed that record it set last year. And I think, as you mentioned, there was a lot of concern about the slowdown in the Chinese consumer. But actually, if you've looked over the past few quarters at the earnings of the likes of Alibaba, of the likes of JD, you've seen that revenue continue to grow at a very, very strong pace, actually outseeding kind of official figures when it comes to retail sales here in China. And it shows you that actually consumers are continuing to flock online, and also these platforms are continuing to keep a lot of these users within their ecosystems. When you look at the likes of Alibaba, they operate a number of sites here in China, the likes of Tmall, Taobao, but these are also things like travel sites they have a payments platform, and they continue to churn money out of users. And I think that's what you're seeing here as well, that continued push. And one interesting point to make as well, it's not just about the Beijing, Shanghai, Guangzhou, Shenzhen, not these giant metropolises here in China where the spending is coming from. It's actually coming from these smaller provinces, these smaller cities as well. And Alibaba and JD both have made a very conscious push into these smaller and lower tier cities, because they see that as the next leg of growth, a new battleground as well. And it's also become somewhat of a point of competition with a smaller rival called Pinduoduo, which has really found a lot of success in the smaller tier cities. And that's now where you see the likes of Alibaba going after. And that's one of the reasons it's had success today so far on its Singles Day shopping event. It's managed to get sales from those consumers, but it's also managed to continue to get consumers to buy imported goods. There was a lot of talk, given this US-China trade war, whether actually Chinese consumers would be turned off American goods, perhaps a bit of anti-US sentiment, but that's not the case. Actually, US brands are the number 2 best-selling brands when it comes to where Chinese consumers are putting their money on Alibaba platforms. So that's very interesting as well. The iPhone, for example, the iPhone 11 Pro and Pro Max are some of the best-selling products right now on Alibaba's platform. So they're doing very well as well. I spoke to an analyst earlier who told me jewelry and apparel also doing very well from US brands. So overall, it looks like a very healthy Chinese consumer, and it looks like a good story for Alibaba. As I mentioned, that number continues to tick up. Analysts are estimating that by the end of the day, midnight tonight, we're going to have a total figure of $37 billion when it comes to that final GMV figure. That is a slower growth rate than previous years, perhaps because this is an event that is maturing, but also perhaps because of some of that increasing competition as well. Nonetheless, still some big numbers here today on Singles Day. Yeah. Jemana, back to you.
Absolutely staggering figures there, Arjun. $37 billion in just 24 hours. Wow. And as you mentioned, the second largest selling producer segment is actually coming out of U.S. products. So that's actually a boon for U.S. product makers as well. All right. Thank you, Arjun, for bringing us the latest out of China. Now, speaking of China, producer prices have fallen by the steepest rate in more than 3 years in October due to a weakened manufacturing sector and continued negative effects from the trade war with the United States. Meanwhile, CPI rose at the fastest pace in nearly 8 years, boosted by a spike in pork prices as the country continues to grapple with an outbreak of African swine fever. Now, President Trump has struck an upbeat tone on the state of trade talks with China. On Friday, Trump denied claims by China's Commerce Ministry that Washington and Beijing had agreed in principle to roll back tariffs if a Phase 1 deal is signed. However, on Saturday, he said negotiations are progressing.
They're moving along. They've moved slowly, and not much too slowly for me. But they want to make the deal much more than I do. But the trade talks with China are moving along, I think, very nicely. If we make the deal that we want, it'll be a great deal. And if it's not a great deal, I won't make it. But the trade deal is moving along, and China wants to be there.
All right, let's bring in Richard Portes, Professor of Economics from London Business School. Before we talk about the trade deal moving along, I just want to ask you about your assessment right now of the Chinese economy, because as we were just discussing with our correspondent in China, the narrative has been one of a big slowdown in the Chinese economy. But then you look at the numbers of the last week, trade numbers seem to have bottomed, moving in the right direction again. Clearly, the consumer is still very powerful, with Alibaba ratcheting up $37 billion in just 24 hours alone. So it looks as though the Chinese economy isn't as bad as some people had feared it may be towards the end of this year.
I wouldn't generalize too much from the figures of Singles Day. That's a very special phenomenon. But it's certainly true that the Chinese economy is not crashing. And those who have been predicting a crash for the past 5, 6, 7 years, whatever, have been wrong consistently, and they will continue to be wrong. The economy has slowed down as intended. They didn't want to have the kind of growth that they had before, the kind of unbalanced growth that they had before. And what they've done to try to change the structure of growth has slowed it down, for sure. And there are problems. Looking ahead, there are problems, especially on the financial side, because of accumulated debt. In the problems in the shadow banking sector, there are problems in the indebtedness of non-financial corporations, like there are problems in indebtedness of non-financial corporations in the United States. But China's not crashing, and the effects of the trade war on China are still relatively limited.
All right, so let's talk about that then, and let's talk about the actual trade war. We're moving towards potentially the implementation of this Phase 1 deal, which is just a rebranding of the discussions that they've had at the beginning of the year. Do you think the market is placing a little bit too much emphasis on the possibility of a Phase 1 trade deal agreement?
Who knows? You have Kudlow saying one day, I think it was Thursday, yes, we're going to have a Phase 1 deal. You have Navarro saying on Friday, no, we're not going to have a Phase 1 deal. Then you have Trump himself saying, who knows? I'm sticking out for a perfect deal. And I think the rhetoric is very difficult to figure out. It depends a lot on Trump, and Trump is he goes from side to side. He's a tariff man, as he says. But on the other hand, he realizes, or people are telling him, that this really isn't good for the United States. The story about collecting lots of revenue and tariffs, he's spending more on subsidies to farmers than he's collecting in revenue on tariffs.
Correct.
Okay, and the revenue is being paid mainly by U.S. producers who use Chinese inputs and U.S. consumers who consume Chinese goods.
And indeed, his focus has also been on stock markets recently, so potentially that could be one catalyst for them to try to sign some form of a deal. But that would just tackle the good side of things, the trade deficit. But what about the longer-term structural issues? This trade war has been going on for about 18 months now. Right. Has there been any progress on that front in terms of intellectual property forced transfers, private ownership, unfair subsidies within China? Do you see any progress on that front?
Relatively little. The Chinese resistance is strong. And yes, on intellectual property, they're certainly willing to give greater protection on patents and that sort of thing. On the other hand, they're not willing to give up on issues like Huawei, for example, and the overall state of their efforts to advance their own technology. I think that's a driving force, that they have now concluded the United States is unreliable, whatever trade deal is reached, and they have to accelerate their own efforts towards self-sufficiency, especially in technology. And so we will see that they are going to push very hard to develop various sectors of high tech in the China 2025 program.
Well, that was all part of the Made in China 2025
Made in
program.
China.
And they're
But
testing
this is
it now.
being accelerated now.
They're testing it now with Huawei. They're launching their own operating system
Absolutely.
there. What does that mean for the global economy if China does become self-sufficient?
That is a very good question. I think for the global economy, it's probably a good thing. The multiplicity of sources of technology, that's got to be a positive phenomenon for the world economy. But the conflict between the United States and China could be exacerbated as China gets closer to the frontier.
Just one last thing that has been used as a potential weapon that people talk about is the currency. And we've got the Chinese renminbi hanging in around 7. It's certainly come back in from some of the lower levels, the weaker levels we were at the peak of the rhetoric exchange between the two sides. Do you think they are using the currency as a weapon somewhat, or at least a negotiating tool?
Absolutely not. No, there is no currency war from the Chinese side. They realize that a significant depreciation would be bad for China in various ways. It would be bad structurally. It would be bad also because it would encourage capital flight, as in the last episode of significant depreciation, 2015, 2016, where people saw, oh, the exchange rate is depreciating, I better get my money out of here. All the capital controls in the world can't stop substantial pressure for capital flight. And so the Chinese do not want a significant depreciation, and they won't allow it.
So happy to keep it stable where it is right now, roughly.
Yes.
What does all of this mean for the outlook going into next year? We're getting towards the end of the year now. Many think tanks are publishing their outlook for 2020. And actually, depending on who you read, I mean, the IMF recently downgraded their outlook for 2020.
They did indeed.
But others are beginning to say, well, look, maybe the worst is over. PMIs globally are bottoming. The China numbers haven't been as bad as feared. U.S. looks like the Fed are going to pause now. What's your take?
The yield curve is not inverting anymore.
Yeah, exactly, yeah.
All this sort of thing, yes. Yeah. I think still the signs are not really good. The signs are not good because you do have financial weaknesses. You do have in Europe a clear slowdown. It's not going to reverse in the near future. And in the United States, the sugar high from the tax cut is gone. And it's hard to see what's replacing it. You don't see a big push in CapEx. Consumption expenditure, yes, holding up reasonably well. But I think the drivers of the global economy have slowed down, and you have weaknesses in emerging markets. We see those which would be threatened if there is a rise. And I think this is key. If there were a rise in U.S. interest rates, that would be really very dangerous for the global economy. So the Fed has clearly signaled it's going to pause in its cuts. I hope they don't start going the other direction again.
All right, with that ominous warning, I'll leave it there. Richard, thank you very much for joining me on Street Science. Richard Portes, Professor of Economics from London Business School. Also coming up on Street Science, more uncertainty in Spain as the latest election again fails to provide any clarity as the far right makes big gains. We'll be right back.
The American people can fix anything. The problem is corporations and the people who run and own them have...
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways. With flights and 7 nights hotel from just £349 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun. With British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season reason to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
Heading for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Guard takes the snap. He'll hand off Jacob straight ahead across the 15. Breaks and tackle 10. Across the 5. End zone. Touchdown.
Tonight, TuneIn has your Monday night NFL football with the Seattle Seahawks at the San Francisco 49ers. Kickoff at 8:15 p.m. Eastern.
It's caught on the near side by Jarwin, the tight end 30. Down the near sideline, the 20. Got a block at the 15. Breaks and tackle 10. Down the sideline 5. He's in for the touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to the show. Spain's fourth election in 4 years has again failed to deliver a majority. The socialists came out on top, but the biggest winner of the night was the far-right Vox, which more than doubled its seats to become the third largest party in parliament. Let's take a look at how Spanish stocks are reacting today. The IBEX 35 is down about 0.25%, but if I'm honest, it's just in line with other equity indices in Europe. All of them are trading on the back foot. But you can see some of the banking names, BBVA down about 0.4 percentage points. So some of the utilities, Iberdrola down about 0.6. So minor losses for the Spanish index, and possibly because the market did anticipate another hung parliament. But Willem joins us live from Madrid and can give us a little bit more details. So we've got the results of the fourth election in 4 years, Willem, and it seems as though the results point to a drop in support for both the centre-right and the centre-left, but the far-right, Vox, did make some major gains in yesterday's election. What does this mean about the possible permutations in order for us to get to an actual functioning government?
Well, you're absolutely right about the centre-left. They lost a few seats. The centre-right party, Partido Popular, actually did much better than it did in April. And as you mentioned there, Vox took up now 52 seats in the parliament behind me, a party that a year ago had not a single seat. So a huge jump for them over the course of these two elections. Pedro Sanchez facing a lot of criticism for calling this election because of the fragmentation it's now created, because the possibility of a new government seems even more remote.
In the end, the best legacy left by our mothers and fathers' generation is democracy. Each time Spaniards are summoned to vote, they participate in high numbers. This needs to be mentioned and highlighted. So thanks to the millions of Spaniards who voted with all my heart. Thanks to the millions of Spaniards who voted for the Socialist Party. Thank you, and thank you with all my heart.
So that's the caretaker Prime Minister defending his decision to hold an election. Of course, his critics said that his decision to do so, to double down, essentially to try and test the waters to see whether there was more support for a social government, has entirely failed. Here's Pablo Casado from the Partido Popular.
Sánchez ha perdido su referéndum.
Sanchez has lost his referendum. Sanchez has failed. He is the great defeated of today. Spaniards have made a motion of censure to Sanchez. He has lost 3 seats in Parliament. Why did he want to call elections if it was supposedly to give more stability, more governance and more power to the Socialist Party? Now it is much more difficult to form a government, and he has made it much harder for Spaniards day to day.
So you can hear the frustration there from Pablo Casado, leader of the Partido Popular, a man who was much happier. We've talked about it already. Vox, they now have 52 seats in this parliament. Their leader, Santiago Abascal, talking about how excited he was that their party was now seen as the third largest force in the parliament.
I think we can be very proud, despite the uncertainty that faces all Spaniards in the future, because a patriotic, social alternative has been consolidated in Spain that demands national unity and the establishment of constitutional order in Catalonia with the unforgiving application of the law.
Now, Jumana, Pedro Sanchez, of course, spent months trying to negotiate a government after the April elections. He said last night he'd like to see generosity from opposition parties as they start these talks. The process could again take weeks, if not months. We could not see a new government here till the new year. We could even potentially see another election.
Willem, one party that you haven't talked about is Ciudadanos, and they've actually gone from a position where they could have joined the prior coalition with Pedro Sanchez. They refused it at the time, and now we've seen they've dropped dramatically in the polls. So are they paying for that decision earlier on in the year?
Well, certainly if you listen to what we just heard from Antonio Roldan, a former member of the party, speaking here a few minutes ago, he said absolutely they've lost that position because they were seen as the pragmatists in the centre who should be prepared to make deals with parties on the left or the right. They didn't make that deal with the Socialist Party led by Pedro Sanchez. And so Albert Rivera, the leader of Citizens, he's now going to face a huge amount of pressure from within his party, having seen his vote support drop very, very dramatically since April. They're now down to just a handful of seats in the parliament.
And at the expense of Vox, with the rise of Vox, as you just mentioned. Willem, thank you for the update from Spain. Now, switching to the UK, Moody's downgrades the UK's credit outlook, citing Brexit paralysis. Fresh UK third quarter GDP figures break right after the break, so do not go anywhere.
Robinhood believes now is the time to do money, without the commission fees and account minimums, so you can start investing today.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Mate, this van's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding?
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles, backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and registered by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
Welcome to Street Signs. I'm Jemima Versace, and these are your headlines. The Hang Seng closes sharply lower amid escalating violence in the city after police opened fire on anti-government protests, leaving one demonstrator in critical condition. Alibaba smashes last year's Singles Day sales record, netting over $30 billion with roughly 7 hours to go in China's star-studded online shopping event. New York authorities open an investigation into Goldman Sachs amid allegations of sexism in its Apple Card business. And Saudi Aramco announces it will sell up to 0.5% of shares to retail investors in its IPO, but stays mum on the size of what could be the world's largest ever listing. All right, we were just getting the release of the third quarter GDP preliminary numbers, and they have come in at 0.3% quarter on quarter. This is a fraction below the consensus of 0.4%, and also pointing to a 1% growth on the year on year. Again, a little lower than the consensus of 1.1%. This is the lowest annual rate since 2010. Let's talk about the breakdown, though. Business investment was flat for the quarter, 0% quarter on quarter. This is actually better than the consensus poll of a negative drop of 0.5%. But on the year, it's also down 0.6%. No surprise, really. We've been talking a lot about the lack of investment in the UK. So certainly coming up here, but for the quarter coming in better than market expectations. In terms of the industrial output, that has come in at minus 1.4% year on year. Again, a little bit weaker than the poll estimate of minus 1.3%. And the construction output has also come in at 1.2% year on year, significantly higher than the estimates of 0.6%. So it looks like some of the positive surprises here are coming from the construction segment and also investment not being as bad as people had feared. I just want to look at the services number as well, because that's been a bright spot in the UK economy. The services number has come in at plus 1.3% year on year, 0% month on month. But for the quarter, I'm just waiting for the final numbers there. So broadly speaking, I would say putting it all together, that 0.3% quarter on quarter, a smidge below expectations. But remember, the last quarter, the GDP contracted by 0.2%. So the UK has officially avoided a technical recession. I want to bring in Ross Walker, the head of UK and European economics at NatWest Markets. Your take on the numbers today, perhaps not as good as some people had been anticipating, but still, UK has averted a recession.
It's avoided technical recession, at least for now. Slightly disappointing numbers. We're running, as you say, off a fall of 0.2% in the second quarter. So a bigger rebound just to get things back to a more normal trajectory was expected. And as you were running through some of the numbers there, services output flat in the month. We'd seen some modest growth in retail sales, and therefore maybe the consumer had been expected to hold up a little bit better. So, these are, I think overall, these are still a weak set of data. Underlying growth in the UK, to my mind, is clearly below trend.
And I don't have the full extent of the analysis to hand, but do you think that some form of stockpiling would have appeared in these numbers as well, clearly ahead of that October 31 deadline?
Yeah,
the second Brexit deadline that didn't happen.
Exactly. We had a huge boost in the first quarter. That effect went into reverse in Q2, and then support in the third quarter as we ran up to the second Brexit deadline. And of course, what you're trying to do as a forecaster is look through those inventory swings and gauge the underlying growth in the economy. And on that basis, these data look a little bit tepid.
And actually looking at the underlying pace of the economy, even the Bank of England said last week that trend growth is roughly half of what it was a year ago. On a quarter-on-quarter basis, we're sort of tracking around 0.2%. We were at 0.4%, 0.5% just a year ago. What do you point that slowdown in trend growth to? Is it a function of Brexit, or is it a function of just the external environment?
I think it's primarily Brexit, not just Brexit. There has been a global slowdown, and certainly in the global manufacturing sector, in terms of global trade, you've seen a deterioration in growth. But Brexit has had really two macroeconomic effects. We had the initial jump in imported inflation that hurt real household incomes and real consumption. And then subsequently, for the last couple of years, we've seen quite significant falls in business investment. And although on today's numbers, as you say, we saw CapEx stagnating, it's really not at all clear that we are going to see any material sustained bounce in business investment over the next year or so. It may stabilize, but I don't think this is going to drive a recovery.
And indeed, what you just said now was echoed by Moody's on Friday with their latest credit outlook release, downgrading the assessment of the UK economy and the outlook from stable to negative. Did that come as a surprise to the markets, you think, or was it largely factored in?
I don't think it will be any great surprise. And certainly the reasons that Moody's were citing, so greater political risk, policy execution risk, Brexit-related adjustments, all of these things are very much at the forefront of market thinking, and I think will remain with us. There's been a burst of optimism with the UK and EU governments reaching a deal a month or so ago, but of course we still have the future economic arrangement to negotiate, the future trade deal. That will be difficult. I think it will be protracted, and I think against that backdrop for the next year or two, that is going to cap the extent to which we see business investment spending, hiring, and so on. So I think the headwinds are going to remain, I think, quite prominent.
Russ, what was your takeaway from the Bank of England discussion last week? I mean, I was there. There were two dissenters, and probably not the dissenters the market anticipated that they were going to be. Do you think that the bank may actually be gearing up for interest rate cuts?
Well, they're certainly moving in a dovish direction. I think I would characterize their position as set out last week as a broadly neutral one. I don't think they're yet signaling certainly an imminent interest rate cut, but I think the balance of risks is tilted that way. Our own forecast is for a quarter-point cut in bank rates in the spring of next year.
Right.
And certainly, obviously, the two dissenting votes, I think certainly Professor Haskell coming on side and voting for a rate cut was a surprise.
Well, the thing about their assessments is it's always been based on the premise that a smooth transition will ultimately lead to some rebound in investment. And obviously, we haven't quite got to the transition deal yet. There hasn't been a Brexit yet. But even, with this continued uncertainty, investment isn't going anywhere. It's stagnating, if not continuing to decline. So at some point, they're just going to have to throw the towel in and say, look, we've been working on these assumptions for years now, but while we've been forecasting something that hasn't quite happened, the economy has deteriorated. That gives them a justification for a rate cut.
It does, and obviously Brexit has been one of the factors that's prompting a bit of a rethink within the Bank of England. However, against that, they also have a fiscal stimulus to factor in.
Yeah.
I mean, the spending review back in September, that alone is worth almost 0.5% on GDP.
Said, yeah.
And pretty much every day that goes by in this election campaign, there's another spending announcement. So, I'm skeptical that the UK can engineer a multi-year significant fiscal expansion. I just don't think the economy is going to be robust enough to allow those sort of spending outturns. But we can run it for a year, maybe 18 months. So,
well, you say you're skeptical that they can run it as in it can't be fully funded at that point. So something will have to give, and in that case, it will be the deficit, the currency, and probably interest rates, especially if you're looking at some of the labour spending plans that are being put out there.
Yeah, and we've seen in the past, we go in the UK very rapidly from a position of broad fiscal sustainability to significant deterioration in tax receipts in the public finances, and before too long, exactly the currency is the ultimate barrier to some of these sort of these fiscal expansionary policies.
Do you think the markets will have to start pricing in a higher premium in the currency going forwards, not just for Brexit risk, but for extreme spending risk as well, and the impact that could have on the deficit?
Yeah, and I think that's really what markets are wrestling with at the moment, because certain election outcomes would get you a potentially radically different fiscal policy. However, the betting markets certainly are shifting in favour of a Conservative majority. The polls have been that way for a while. So there will certainly be some fiscal expansion. As I say, I think in practice it will probably be a little bit more modest or more drawn out than perhaps the impression that's been given at the moment.
Perhaps the imminent hurdle we need to get through is that December 12 election, and then from there we can start making more informed opinions. All right, Ross, thank you very much for joining me. Ross Walker, the head of UK and European economics at NatWest Markets, joining me on the show today. All right, a quick look at European markets. As we've been talking about, the handover from Asia was pretty negative, with the Hong Kong index closing down about 2.6%. Shanghai Composite having its weakest session in over 4 months. But European indices, as you can see, mostly trading in the red. The FTSE MIB in Italy down 0.4 percentage points. Spanish index IBEX down 0.3 percentage points. Again, inconclusive results out of the general election. And FTSE 100 down 0.5 percentage point. And even before this GDP data came out, the UK was trading on the back foot after the Moody's downgrade in outlook from Friday. So that is the picture for European equities. Let's talk about foreign exchange. And we've got a euro trading slightly firmer versus the dollar here, up at 110.30, about 0.1 percentage point firmer. We've got cable up at around 128, 0.25 percentage point firmer. And we actually saw a bit of a bounce after those Q3 GDP print data came out, indicating that the UK did actually grow at 0.3% quarter on quarter and averted a technical recession. So a bit of a bounce in the pound there. And then we're also seeing a bid for some of the safe haven currencies, yen and Swiss franc, overnight, given the move in risky assets. How about U.S. futures? How are things looking? Well, we had another record close for the three majors on Friday, but with sentiment turning south overnight, it looks as though the three majors are going to open up in the red. The Dow is seen opening up about 100 points lower. Not much in the way of data today, but tomorrow, President Trump will be giving a speech at the Economic Club in New York, so you want to watch out for that. Any signs on how trade discussions are going will be crucial for market direction from here. Now, the ECB President Christine Lagarde will reportedly face calls to consider overhauling how decisions are made at the central bank in her first council meeting this Wednesday. The Financial Times reports that 4 officials from the EU's national banks will propose that members have more input in policymaking, including regular votes. Lagarde had invited the Governing Council to put forward ideas in a bid to smooth recent divisions. Her predecessor, Mario Draghi, drew criticism for announcing decisions before discussing them with the Council. And Germany, elsewhere, let's switch on to Germany, which is marking the 30-year fall of the Berlin Wall, and obviously a very important event marking the end of the Cold War. Annetta joins us live from Berlin. And Annetta, give us a snapshot for how the economy is faring 30 years on from this momentous occasion that happened.
Well, first of all, it took a lot longer to actually see a conversion between the East and the West. I mean, during the 90s, for example, that was, of course, the first 10 years of that reunification process. We had record high unemployment here in the East, loads of companies going down. That has changed by now. If you look at the unemployment rate, it is convergent. It's still a tad higher in the East, but still, it is standing at some 6.8%, whereas the West of 4.8%. So it's not like skyrocketing. Also productivity, it is lower here in the East, and also disposable income is a lot lower, not a lot, a little lower than in the western part of Germany. So essentially, I guess it's fair to argue that economic conversion is happening. What is not happening is political conversion, or like the conversion or psychological conversion, that the people do have the sense that they are on the same level as in the West. If you look at opinion polls, for example, if you ask the question whether you are at the same level like the West, or whether you have a feeling of falling behind in the East, then the majority of people would say yes, they don't feel that they have the same prosperity as people in the West. They don't feel that they have the same infrastructure like the people in the West, etc. pp. So I guess it's a psychological problem or a mentality problem for as of now, and that that actually is mirrored in the political scene. We have been reporting about the outcomes of regional elections in the eastern part of Germany. And here it is the Populist Party, which is actually one of the strongest parties in the region. And that is because they do kind of cater to that appeal of not participating in the economic success story of Germany, and also the anti-immigration rhetoric is going down very well in huge parts of Eastern Germany. So bottom line, after 30 years of reunification, yes, the economic conversion is somewhat happening, even though there's not a single DAX 30 company headquartered in the eastern part of the country. They do have production plants like Volkswagen or BMW as well, but it's not that the decisions are necessarily taken in the eastern part, but the political conversion is still lacking far behind. For that, back to you.
Excellent summary of the situation 30 years on from that momentous occasion. Annette, thank you very much, live from Germany. Now, new co-head of wealth management at UBS, Iqbal Khan, has told the bank he sees, quote, quick wins by extending credit to rich clients. The memo to staff, seen by 2 news agencies, is the first indication of Khan's strategy at UBS, following his controversial departure from Credit Suisse amid a spying scandal that rocked corporate Switzerland. Khan told employees, quote, financing is definitely an area where we can do more, and a move that could spark comparisons to his time at rival Credit Suisse. Now, speaking of Credit Suisse, the bank has announced a raft of executive changes, with 22-year veteran David Miller appointed as CEO of its investment banking and capital markets business. Miller will replace James Amin, who is taking on a new role as the head of private credit opportunities. He'll also take Amin's seat on the Swiss bank's board. Eric Varvel has become chair of investment banking and capital markets, replacing Harold Bogle, and the changes will take place with immediate effect. Now, Goldman Sachs has come under attack for alleged sexism in its Apple Card business. The New York Department of Financial Services has opened an investigation into practices at the Wall Street Giant's credit card business after a well-known tech entrepreneur criticized the bank for discriminating against women. In a series of tweets, David Heinemeier Hansen attacked Goldman after the Apple Card given to him had 20 times the credit limit his wife was afforded. This despite the fact that his wife's credit score is higher than his own. The case has drawn a lot of attention on social media, and Apple co-founder Steve Wozniak also joined the online criticism, saying he and his wife had a similar experience. Goldman did not immediately respond to CNBC, but in an email to Reuters, the lender said that, quote, decisions are based on factors like income and creditworthiness, not gender. Now, switching to politics, Bolivian President Evo Morales has resigned after 14 years in power amid unrest following a disputed election last month. Morales won the election, but authorities found irregularities with the vote, prompting protests on the streets of La Paz. Bolivia's army called on the now former president to step down, but Morales has described his resignation as a, quote, civic coup. And if you want to get involved in the conversation, anything we've discussed on this program so far, whether it's Aramco IPO, the UK GDP data, China, you can get involved on Twitter at StreetSignCNBC, or just tweet me directly. I am at CNBCJu. Now, also coming up, Saudi Aramco releases its highly awaited IPO prospectus, but offers few details. The latest from Adipec in Abu Dhabi coming up in just a few moments. Plus, stay tuned for Hadley Gamble's fireside chat with former U.S. Secretary of State Condoleezza Rice.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Okay, so it's already November and you have that gift list to get through. Well, at Boots, you can save up to half price on seasonal gifts that'll blow your mind, not your budget, with brands like Soap & Glory, No. 7 and Jack Wills. So get yourself to Boots and discover what to buy your bestie for the leastie. Offer ends 10th of November in selected stores and 11th of November at Boots.com.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Secretary of State Condoleezza Rice is speaking at the ADIPEC conference in Abu Dhabi. Let's listen in.
Protectionism, when there had been violent conflict over resources. And as a result, the people who, after World War II, looked back on that period said it was also a period that had led to war and to a Great Depression. And so this time, they created a different kind of system, one based on free and open trade, one in which there were great institutions like the International Monetary Fund, like the World Bank, and of course the General Agreement on Tariffs and Trade, the idea to have countries trade freely. That system also relied on U.S. leadership, and it relied on U.S. military protection. The United States had also, after World War II, realized that it had gone back into isolation, and only because there had been another great war did the United States re-enter the international system. This time, the United States took a pledge to the Europeans. An attack upon one is an attack upon all. It took a pledge to defend Japan, and it took a pledge to defend the sea lanes to allow freedom of commerce. That system of a global economy that would be prosperous for all, that would trade in freedom, where there would not be violent conflict over resources, but rather instead, where there would be a concept of resources that could be shared through the global trading system. That system worked exceedingly well. It worked well enough that when the Soviet Union collapsed, the countries of the former Soviet bloc would become a part of that system. So that today we can talk about investment in Russia or in Poland. It's very interesting that we've just come to the 30th anniversary of the fall of the Berlin Wall. In a couple of years, we will come to the 30th anniversary of the fall of the Soviet Union, the end of the Cold War. And I think expectations coming out of that the global order would finally be completely fulfilled, not just for that part of the world that was a part of the US and European and Western system, but for the entire world. The system of free markets and a free economy and global trade worked exceedingly well also, in that when Deng Xiaoping decided to bring China out of isolation, China became a part of that international economy. And so free markets, global trade, an economy that benefited all, protected by American military power and American leadership, this was the idea of 1945 and its fulfillment some 30 years later in the end of the Cold War. Well, I would suggest to you that now that system is under strain and under threat. And it's under strain from three important challenges. The first important challenge is that the security environment has changed dramatically since 1945. I was the National Security Advisor on September 11th. If you were in a position of authority on September 11th, every day after was like September 12th. American security and America's notion of her security changed dramatically and forever on that day. Because it was not marching armies that caused the World Trade Center to come down. It was not marching armies that brought a hole into the middle of the Pentagon. It was not marching armies that created the first attack on American soil since the War of 1812. It was terrorists operating in the world's fifth poorest country, Afghanistan. That is what caused the attacks in the United States. And so for the first time, American security became about internal security, and the threat of ungoverned spaces like Afghanistan, or today, Mali, or Libya, or at one time that territory between Iraq and Syria, that would become the great threat. Much, much more difficult.
Well, we're just listening to Condoleezza Rice, and we're going to hear more from the former U.S. Secretary of State at 11:05 CET. So that's when she is done with this speech. She will be sitting and having a fireside discussion with our very own Hadley Gamble. Plus, make sure you join us at 11:30 CET for another special panel from ADIPAC, which includes the bosses of BP, Total, Eni, and Siemens, and that one is moderated by our very own Steve Sedgwick. Before we head out, let's take a quick look at U.S. futures. European equities have been trading on the back foot so far with a weak handover from Asia, and the picture is pretty negative as well for U.S. equities. Dow seen opening up about 120 points lower, this after yet another record close on Friday. But that is it for our show today. I'm Joanna Versace. Worldwide Exchange is coming up next.
Thanks for coming in.
No problem.
Since one of our laptops got hacked on a business trip, everyone's been a little paranoid.
That's CDW, we get.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery's running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
5 this morning as futures point to some losses. Crisis in Asia. Unrest in Hong Kong flaring up again as police and protesters clash after a weekend of unrest. Goldman under fire. The investment bank facing new investigations after allegations of bias in its new Apple credit card approval process. And Jamie Dimon on the defense. JP Morgan CEO Jamie Dimon speaking out with new comments on the wealth tax, inequality, who he calls, quote, greedy bankers, and another record for Alibaba on its 11th annual Singles Day as worldwide exchange begins right now. Guns N' Roses on a Monday morning. Good morning. I'm Dominic Chu in for Brian Sullivan today on this Monday, November 11th, 2019. Happy Veterans Day to all those who are serving and who have served our great country. Well, here's how your money and the global markets are setting their day up. Stock futures indicating the Dow will open down today by just around 120 points at this stage. The S&P off by about 12 and the Nasdaq off by about 42 as well. So taking a bit of a pause from those record runs. Stocks are coming off their third positive week in a row and the 8th record close of the year. The bond market is closed for Veterans Day and that holiday and banks as well. Let's go now worldwide in the early trade for Europe. We are seeing that negativity carry over there as well. The German DAX off by about 1/3%. The CAC in France just about flat though, but the FTSE 100 in the UK off by 0.5%. Now in Asia, red across the board as unrest in Hong Kong hit a new level overnight. CNBC's own Emily Tan is live in Hong Kong with the latest.
Hong Kong markets getting sold off on the back of rare weekday violence as weekend unrest rolls over into the citywide protests on Monday. The Hang Seng Index drops more than 750 points or close to 3%, with benchmark heavyweights HSBC and Tencent off more than 1%. AIA shares down more than 3%. Hong Kong police opened fire this morning at protesters, hitting at least one man. The 21-year-old is in hospital and in critical condition. Protesters blocked major thoroughfares across the city, resulting in major traffic disruptions. At lunchtime, police fired tear gas in the central business district after protesters gathered in front of a high-end luxury mall only a few blocks from the Hong Kong Stock Exchange. Numerous subway stations were closed after protesters started a fire on a train. There was vandalism at numerous stations and objects thrown onto the tracks. Tensions were inflamed this weekend following the death of a 22-year-old student last week after he fell in a car park during a police dispersal operation. At least 8 of Hong Kong's 10 universities canceled class today, with several rounds of tear gas being fired in one of the universities. I'm Emily Tan in Hong Kong. Back to you.
All right, thank you very much, Emily, for that. Back to the markets now. Futures indicating the Dow will open down by about over 100 points at this stage. Joining me now is Peter Bookvar, Chief Investment Officer at Bleakley Advisory Group. He's also a CNBC contributor. And Peter, this is an interesting move here for markets, only because we're at record highs. It's not out of the realm of reason for a pullback. But is this something we should be worried about because the data out there may not support the market at current levels?
Well, the catalysts the entire year have been Fed rate cuts and a trade deal, even though we've obviously had some bumps in the road on that trade deal. But now we've gotten the rate cuts, and we seem to be on the cusp of a trade deal of some sort. So in a way, we maybe have exhausted those two catalysts, and in order to sustain this, we need the economic data to respond positively, and we need the earnings slowdown to reverse itself to the upside. But that may not be till 2020.
So the whole market, globally speaking, has been kind of like part of this rising tide. We've been focusing so much on the U.S. because it is the driving force behind what's happening in the markets, globally speaking. But when you see action like in Asia overnight, these are some sharp moves to the downside. Is it kind of calling into question a little bit about what's going to happen if the rest of the world cannot get its act together with regard to markets?
Well, overseas markets have finally caught up in terms of performance. They've been underperforming for many years. And hopes on this deal and the rate cuts certainly have helped, in addition to some recent weakness in the dollar. But in order to sustain that, you need to see details on this trade deal. You need to see, are we going to see tariffs come off? Not just the December ones, but the existing ones. And that remains to be seen here. But the economy is slowing, and we have to deal with that reality. Earnings growth is now reversed to the downside. So that's the fundamental basis. So a lot of the rally has been on hopes that this would reverse itself. But again, the reality is that global growth continues to slow.
You know, every time there's a major piece of economic data, you know, one of the things that you're great about doing is kind of telling your clients, telling those of us, kind of breaking down all the information. You mentioned the economic data is a little bit weaker these days. Earnings growth is now turned negative. With that being said, is this a situation where the markets can continue that way if the Fed does what it does and the markets kind of churn around the way that they do at current highs?
So with respect to the Fed, the 3 cuts we got were considered insurance, mid-cycle adjustments. Any further cuts from here would be crossing a line in terms of them now addressing deeper economic slowdown. On the other hand, there's obviously hopes that this is a soft landing. The 3 is all they need to do, and that will be enough to stimulate growth further. And then on the trade side, well, if there is a deal of some sort, a détente, a calmness, even though we'll have still remaining tariffs, will that be able to inflect higher the slowdown in manufacturing and trade?
So we've had a number of guests on our air over the course of the past couple of weeks. Over the past few months, we've said PMIs, ISMs, a lot of these indicators have shown a deterioration. But now we're hearing folks calling it a bottoming process. Do you believe that it's a bottoming process right now for all those manufacturing and services gauges across the world?
There's a short-term stabilization, but whether that inflects higher will depend on how we respond again to those rate cuts and what kind of deal we get. I think if the tariffs still remain on in bulk, it'll be hard to get this inflection point much higher. So that's a 2020 story. It remains to be seen. Let's be hopeful, but I'm not sure, because now that weakness in manufacturing is spilling over into services. And services, at least in the U.S., is the predominant part of the U.S. economy.
All right. Peter Bookvar, Bleakley, thank you very much.
Thanks, Tom.
All right. Well, new this morning, Apple and Goldman Sachs caught up in a new controversy over the Apple credit card. And Kate Rogers joins us now with the latest there. Good morning, Kate.
Hi, Dom. Good morning. New York's Department of Financial Services is launching an investigation into Goldman Sachs credit card practices. This comes after a tech entrepreneur accused the algorithm the bank uses for the Apple credit card of gender discrimination. Apple launched the card in August in partnership with Goldman. In a series of tweets, David Hansen claims his credit limit was 20 times higher than his wife, even though they file a joint tax return, and she actually has a higher credit score. Hansen says after his complaints, Goldman raised his wife's credit limit, with customer service reps explaining, quote, "It's just the algorithm." Hansen tweeting, "It does not matter what the intent of the individual Apple reps are. It matters what the algorithm they've placed their complete faith in does, and what it does is discriminate. Apple co-founder Steve Wozniak joined in the debate, claiming his credit limit was 10 times more than his wife, even though they have no separate assets. He says, quote, hard to get a human for a correction, though. It's big tech in 2019. In an email to Reuters, Goldman says applicants are evaluated independently. It is possible for two family members to receive different credit decisions, but Goldman says we have not and will not make decisions based on factors like gender, Dom. Back over to you.
All right, Kate Rogers, a big controversy over at Goldman Sachs and Apple as well. Thank you very much. Let's get a look at some of the other top stories we are following this morning. JP Morgan Chase CEO Jamie Dimon is continuing his war of words with 2020 presidential candidate Senator Elizabeth Warren. In an interview with CBS 60 Minutes last night, he was pressed on the growing wealth gap separating the rich from most of the other Americans out there, along with his comments to CNBC last week about what he called the vilification of billionaires.
What I was commenting on is that anything that vilifies people, I just don't like. I think that, most people are good, not all of them. I think you should vilify Nazis, but you shouldn't vilify people who worked hard to accomplish things. And so my comment is, I think it's American society. We're just attacking each other all the time. The notion that I'm not a patriot or that some of these other folks aren't patriots, that's just dead wrong. So, my view is let's all work together, and I don't mind if a few barbs are thrown my way by anybody.
All right, that was Jamie Dimon on 60 Minutes last night. Also, Uber CEO is backtracking after calling the murder of Saudi journalist Jamal Khashoggi a mistake. In an interview with Axios on HBO, Dara Khosrowshahi compared Khashoggi's death to a fatal crash by one of his company's self-driving cars. Axios said that Khosrowshahi called back an hour after the interview expressing his regret for what he said and later emailed a statement saying, I said something in the moment that I do not believe. And Alibaba says it set a new sales record for its Singles Day shopping event. The Chinese e-commerce giant says sales have topped so far $30.5 billion. Alibaba has said it expects over 500 million users to participate in the shopping festival this year. That's about 100 million, by the way, more than it did last year. Well, when we come back on the show, new details on Saudi Aramco's hotly anticipated IPO. We are live in Abu Dhabi coming up next. Plus, reports this morning, Boeing may deliver some 737 MAX jets to airlines as soon as next month. And later on, what Instagram is doing that may spark some millennial outrage. A very busy hour still ahead when Worldwide Exchange returns after this.
Let's go and see the stars, the Milky Way. Make fitness routine with Pure Protein.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Make their Christmas wishes come true. Whether they want to jet off on Barbie's dream plane, run with the storm in Fortnite, or glide along on My Lovely Llama. At littlewoods.com, you'll find all the toys they love, all with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Welcome back to the show. Breaking news out of Hong Kong. Hong Kong Chief Executive Carrie Lam speaking just moments ago, saying the protesters are relentlessly destroying society, adding the violence has far exceeded the call for democracy and demonstrators are now the people's enemy. Lam says she wants to tell the protesters they will not succeed in securing their demands. Of course, all of this comes amidst another weekend of protests that have spilled over into today's session. We did see some moves in Hong Kong markets to the downside, those protests playing a big part in some of those moves as well. Well, Saudi Aramco is disclosing its massive 650-page IPO prospectus over the weekend as the oil giant kicks off its offering period. NBC's Dan Murphy joins us now from Abu Dhabi with the latest. And Dan, this is a massive IPO. What are investors expecting given this prospectus drop?
Hi there, Dom. Well, Saudi Arabia came out across the weekend and released more details of this highly anticipated IPO. This was a 650-page document, indeed the most information that we've received so far from the kingdom and the company relating to this IPO. However, the devil is in the detail and key questions for investors remain unanswered, including exactly how much of this company is going to go public, exactly where a potential secondary listing could be taking place, and other big questions as well, like how much is the company worth and exactly how much of the time frame is really going to come into play here. The date for the listing also remains unclear. What we did learn across the weekend, though, was that Saudi Arabia and Saudi Aramco plans to list 0.5% of shares to retail investors, and that is quite significant. Clearly, the Saudi Arabian people are going to play a big role in this IPO. And we also learned that the institutional book build is likely to be completed by December 4th. That's also significant because that will be the next time frame we will look towards when it comes to getting some of those questions answered and more information coming forward about this IPO. Dom, we are here today at the ADIPEC conference in Abu Dhabi, and the Saudi Aramco IPO is key among the discussion points for investors here and policymakers in attendance. This is one of the most important oil and gas conferences in the region and arguably the most consequential, with about $16 billion worth of deals being announced here just last year. I've been speaking to a number of policymakers, including the Omani energy minister just a short while ago. He says that perhaps this could play into the December OPEC meeting, this issue of Aramco, and the question of whether or not the Saudis and Saudi Arabia may actually pressure the group to perhaps deepen production cuts in order to elevate oil prices coming into that IPO. A big question. Of course, he suggested to me, though, that it is likely we will see the deal being extended and deeper cuts aren't necessary at this point. So certainly a lot to discuss, and Aramco on top of the list here. Back to you, Dom.
All right, so Dan, just to follow up, you mentioned 0.5% of shares being floated out there will be sold to retail investors, maybe in Saudi Arabia or elsewhere. We've also heard reports that many of the Saudi royal family, billionaires and millionaires in the country itself are being perhaps pressured into subscribing to the IPO itself as well. What can you tell us about the latest there? Do we expect many of the crown princes to put up their own money to back this IPO?
It's a really good question, Dom. Yes, that's correct. So we have heard that there has been influence from the company in order to perhaps attract local investors into this mega IPO. But the real reality is, even though it's just 0.5%, that really reflects how Saudi Aramco is not necessarily relying on the Saudi population to fill the book, right? It's still looking out for those institutional investors, including massive NOCs from around the world, like Malaysia, for example, which has also reportedly been tapped to take part in this IPO. And it sees the institutional book build being critical to achieving achieving that valuation that it so desires, up around $2 trillion US. However, the reports would suggest that the company's valuation is probably closer to somewhere between 1.2 and 2. So this is going to be interesting to watch as well when it comes to determining exactly how much the company is worth and what type of demand it's going to receive as well moving forward.
All right, CNBC's Dan Murphy, live in Abu Dhabi with the latest. Thank you very much for that. We appreciate it. Still on deck for the show, new revelations around WeWork and the lead up to the eventual scrapping of its IPO. Plus, remember those solar eclipse sunglasses from 2 years ago? You might want to break them out again, but not for the reason that you think. It's trending, and it's coming up when Worldwide Exchange returns after this.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
This weekend, Volvo are offering 0% APR finance on a Volvo Select approved used car. Which means, this weekend, 0% of people will visit their in-laws. So, visit your local Volvo retailer this weekend and drive home an approved used car with 0% APR finance. Oh, and please send our apologies to the in-laws.
Available on used vehicles up to 4 years old, participating retailers. 50% minimum deposit on minimum finance amount of £7,000. Conditional sale, terms and conditions apply. Finance subject to status, 18 plus. Guarantee may be required. Volvo Car Financial Services. Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, various policy applies. See tescomobile.com/terms.
All right, that's a live shot of Chicago, Illinois, where it is 4:21 a.m. Central Time. It's a little bit wet out there, so be safe out there for all those commuters. Let's get a check on some of the other top stories of the morning so far. Boeing is hoping to deliver 737 MAX jets to airlines before the end of the year. The Wall Street Journal reports the company would make the deliveries even if the FAA and other regulators have not approved related pilot training for software fixes on this plane. We'll watch that story. WeWork was reportedly wrestling with the SEC over a key financial metric and other concerns just weeks before its planned IPO. The Wall Street Journal says the SEC was concerned about how WeWork was framing its heavy losses. The IPO was, of course, shelved back in September. And Kaiser Permanente says chairman and CEO Bernard Tyson died unexpectedly in his sleep on Sunday. As one of the country's leading healthcare executives, Tyson rose through the ranks during a 30-year career at Kaiser Permanente, becoming its CEO in 2013. During his tenure, the company grew to serve more than 12 million members with a workforce of 218,000 folks. Bernard Tyson was 60 years old. Well, still to come up, a look at the other top stories of the morning, plus a return to value, why our next guest says markets are doing something they have not done in 20 years, and that it's a huge buying opportunity. Worldwide Exchange is back right after this.
The world is built for you. It's another Monday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Ends tomorrow. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery's running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
What if your email was organized by project and not by date? What if everyone looked at the same thing instead of their own inbox? Then it wouldn't be email at all. Forget your fragmented, jumbled inbox and make the change to channels in Slack. Spaces dedicated to individual projects, topics, or teams. All your communication is neatly organized and everyone is on the same page.